A place for information and talk.
Power 98.7. Now we're talking.
All right, 20 minutes now on Power Business, proudly brought to you by MTN. Today we make moves. Let's get into this next conversation now. Mantengu Mining released its audited financial results for the year ended February 2025, reporting record revenue and profit growth despite external challenges such as volatile chrome prices and severe flooding in Limpopo. Now, Magen Naidu, CFO and Executive Director at Mantengu Mining, joins us on the line to take us through the latest set of numbers. Magen, a very good evening and good to have you with us on the show.
Nosipho, thank you. It's an absolute pleasure to be back on Power FM.
Oh, fantastic. So we saw then a massive jump in net profit from 1.2 million to 303.3 million rand. Talk to us about, or take us through the overall financial performance for the year.
Nosipho, we had a very good year. I think, it's best breaking up the year into a few parts. So we had our challenges at the beginning of the financial year of FY 2025. And we did report to the market previously that, we'd made a change to take the mining function in-house or to bring it in-house. We did that towards, let's say, in the middle of calendar 2024. Turned out to be a very good decision because, our production, we achieved record production month after month. And then towards the back end of calendar 2024, the chrome price obviously dropped quite a bit in the market, which had a negative impact on us. And then into 2025, the entire industry was hit by major flooding, throughout the country.
And I want to get into that now, again, because Mantengu faced significant external challenges, as you point out, including the volatile chrome prices and the severe flooding in Limpopo. But how do these factors impact then your operations and financial results? And talk to us about what risk management strategies are you implementing then to mitigate similar events going forward?
Thanks, Nosipho. So, Nosipho, the chrome price, the decrease in chrome price at the end of 2024, had a negative impact of 28 million rand on our revenue and our net profit. And the reason that the number is the same on revenue and net profit is because, our logistics costs, including the mine to port and freight, remain basically the same. So we felt that impact on both the revenue line and the net profit line. And if you look at the flooding that impacted our operations, our biggest issue was that, we were unable to mine. Our plant was still able to run, but we were unable to mine. We had to evacuate our staff. And, the lower production volumes as a result of that flooding had a negative impact of 38 million on the revenue line and 30 million rand on the bottom line. Now, there wasn't much of a change between the two because the only variable cost that we were able to save was diesel, because our staff costs and our machinery costs, remain fixed. If you ask me what are we doing, to mitigate those items, I think, from a price volatility perspective, all you can do is make sure that you operate at the lowest end of the cost curve as possible. So if you look at us, for example, we were still able to be profitable even with a 1/3 drop in price. Now, that's not a light or easy feat to achieve. However, our cost structure is optimal, and we try to operate with as minimal an overhead structure as possible. If you look at the flooding, from a volume impact, all you can do is make sure that, you build up enough of a supply from a mining perspective to keep your plant going in flooding, for example. However, it's not a small increase in cost to basically ramp up your mining fleet, build up stock. You carry a larger working capital number on your balance sheet, bigger cash outflow. So you've got to find that balance between, saving up for a rainy day, etc.
Yeah, certainly. Now, let's talk sustainability then, Magen, because sustainability was a theme this year. Take us through the specific steps then that are being taken to reduce environmental impact, especially in energy intensive processes like chrome beneficiation.
Nosipho, our number one focus this year in FY 2026, you mentioned chrome, but I'm going to first talk about our silicon carbide operation. Our number one focus is to put in some form of a renewable solution to reduce the energy cost at Sublime. And the reason for that, apart from the environmental impact, which of course is positive, our energy cost is about 50% of production cost at Sublime. And so any renewable energy solution that not only has a positive impact on the environment, but that results in a positive bottom line, is a win-win for us. And, I gave you that example, 50%. Now, that's a big number. Now, if you save half of that, you're looking at saving 25% of your production cost. And if I just give you an example, Brazil currently, their energy cost is about 25% of South Africa. So if we try to compete against Brazil, let's say in the US market or the European market, we're at a major disadvantage purely because of high energy costs. So, Sublime is the number one priority for us, or number one focus area. And when you look at chrome, our Langpan chrome operation currently only runs on diesel. So it's got no Eskom. We've got no Eskom power. We do not have an allocation from Eskom. And so that's a focus area that's not far behind Sublime, because it will allow us to again have a positive impact on the environment and put some cash back into our bottom line.
Yeah. So when we look ahead then at the strategic vision then for financial year 2026, again, what are the biggest opportunities and challenges you foresee then for Mantengu, especially in the context of fluctuating commodity prices and global sustainability trends?
Nosipho, I think, an opportunity, we've got to take advantage of high chrome prices currently. So that's a clear opportunity. And the way we can do that is by, maximizing our production, so producing as much as we can. I think another opportunity for us, the major or the larger miners in this country have some good assets that are basically too small for them to operate. And when I say too small, I mean it's not economically viable for them to operate those assets because their overheads are too large. And we believe we can operate these assets at the lower end of the cost curve, and therefore for us it's profitable. You would have seen, there's increased activity in the market where majors are offloading assets that they are not operating. And so for us, this is a clear opportunity. I think a challenge for us is to keep, financing all of our yellow machinery as our mining operations are growing, and that means our debt becomes larger. However, the one plus for us is that we are financing our yellow machinery over 4 years, and this machinery will last more than 4 years. So, for example, if they last 6 years, we've got 2 years without any equipment costs. Now, that's a massive positive on our income statement.
All right, Magen, we're going to leave it there. Thank you so much for taking us through those latest set of results.
No problem. Thank you very much, Nosipho. Pleasure.
All right, that was Magen Naidu, CFO and Executive Director at Mantengu Mining, taking us through their financial results for the year ended February 2025.